Hello everyone, my name is Kaseem. Welcome to the $1 Million Challenge. So in today's video, we are going to do a continuation from the last week's video. You can go check that video out. It's talking about things that we should be doing, during bear markets and just talking about how to evaluate companies, picking the right companies to invest in and stuff like that. So before we get into the video, two things that I want to get out of the way. There will be a timestamp in the video description, because this is a deep dive video. It's not going to be, this is an educational video that educate people on how to research company. This is how I research company. It's going to be a deep dive. This is not for entertainment, it's for education. So if you have the time to spare, you are going to learn a lot in this video. So if you want to skip some part of the video and you feel like you understand certain parts that I'm going to certain topics that I'm going to talk about, you can use the timestamp in the description below so you can skip ahead if you understand certain topics. So the next thing that we want to talk about is, this is not financial advice. This is for educational purposes. Okay, I do research into companies that I want to invest my money in. Okay, so this is for educational purposes. This is not financial advice. Let's get that out of the way and let's get right into the video. I'm going to bring another deep dive of T.Rowe Price to you right now. One of the reasons why I want to do that is because T.Rowe Price is actually one of the companies that I own, and it's actually a big company as well. And they are, quite on the price right now, just like everything else in the market. So we're going to do a deep dive of that today and just show you some of the things that I like to look at when it comes to evaluating companies. So first and first, this is the quick about page, so we can get to see some of the things that they do. First of all, they are an asset management company. Okay, we can see right here, T.Rowe Price, they're asset management firm. And I'm going to put the definition of asset management firm right here so you can read it. Pause this video, read it so have a little bit of an idea of what that is, right? So the next thing that we need to do is, what does an asset management company do? This is the breakdown of some of the things that they do. They do personal finance, and within that they have mutual funds. They have 401k, so that means they manage people's jobs, investment, 401k, mutual funds, and all those things. So they do that on the personal level. They have that on a work level, and they also have that on the institutional level. All right. They also do financial advising and also record keeping, obviously consulting for big companies, I would imagine. Okay, so this just talks a little bit about what they do and everything like that. This is basically from the website. You can go and read the mission, but I'm not really gonna go into that because that's not really important to me right now. Just a quick overview of what they do as a company. That is what we're looking at here. Let's see. They do bookkeeping, shifting economic landscape. They have a podcast talking about what they do. So that's a good thing. If you want to get to know, what the company is doing more closely, you can watch the podcast and everything like that. Black History Month, focusing on financial health and wellness. It's pretty cool. And yeah, so this is just a basic overview of what they do. So the next thing we're going to look at their global footprint. Where are they at in the world and how big is their business? So if we pop here, we can see this is their global offices, right? So we'll see where they're actually physically located and where they're doing business. All right. So T.Rowe Price global office, basically you can see that they are in the wealthy countries. They are all over the United States. They're in London. They're all over Europe. Obviously, they're in Dubai. They're in Tokyo. They're in Shanghai, Hong Kong, Singapore, Melbourne, Disney. Basically, big countries, continents. They are in their hubs, and they're basically in the financial hubs of major countries. So that's a good thing. We scroll down, you can look at their offices. Yeah, some of their office in America, New York. You can keep on scrolling. They have the office here in Europe. Dubai, Germany, London, Luxembourg. So they have their office everywhere. At this point, we can clearly see that they are a global company that do asset management on a global basis. So the next thing I want to look at is like, how big is the money that they're managing? Because we already know this company, they do asset management. They manage other people's money, whether that's personal, whether that's workplace, retirement. Their job is to take money from 401ks, from individuals, take money from people and invest it how they see fit. Okay. So we see that the AUM, and AUM simply means assets under management. In 2021, the AUM is 1.52 trillion. And that is pretty nice. That's a big chunk. Okay. And they make money off of the fees that they charge those people that they've invested $1.52 trillion into T.Rowe Price. So that's how T.Rowe Price make money. They take a cut off the fees. So the next thing that we want to look at is, what is the stock price doing and how has the stock price done over the years? And the way that I like to look at this is I like to start from the history. Okay, and we'll look at it. We start from the history and we look at it all the way down, so we can get a better idea of how the stock has performed over the life of the stock, and you just work your way down. And we can see at the very top here, it has grown 15,000% ever since this stock started trading, which was in 1986, which that is a lot of percentages. Okay, it has grown 15,000% over the lifetime of the stock. So that's pretty nice, from 91 cents all the way to 142 that it is right now today. So it's a US listed stock and its headquarters in the US. So if we take a quick look here, I like to look at the dividend because I want to invest in companies that pay. There's only on a very small instance that I invest in companies that don't pay. But the dividend is 3.38%, which is really good. PE ratio is 10. But I don't really, we'll get into that later. But the dividend here is 3.8%, so which is good. So let's take a quick look at the price, what the price has been doing. So in the past 5 years, we'll see that there's been times where it has some few downturns, which has been like 30%. This is 30%, let's say 5 years. In 2018, it went down 30%, and then it recovered pretty quickly for a couple of years there, and it jumped up, 49%. So this is obviously during the Rona times, and it also dropped 35%. So here it dropped 35, roughly about 30%. Major drops look like, for the stock, major drop is 30 to 34%, and then obviously it had a crazy run from there, and that has been 133%. Mad. That's a mad move. And then we had smaller drop here, 12%. Then we had a little small drop here, 11%, until the drop continues at 30%. So for me, I'm thinking this company that has passed $1.5 trillion under management, and they collect fees on this $1.5 trillion for T.Rowe Price, for the company. That's why they'll be able to pay this dividend right here. So like this right here looks very enticing, looks good to start buying into this in my opinion. And if you take a look at the past year, they're down 12%. Year to date, they're down 28%. 6 months, they're down 34%. Take a quick look up here, and we look at the month, it's down 10%. 5 days, 3%. So at any point in the past year or so, they've actually been beaten down quite badly, but they are still paying a almost 3.4%. They're still paying a dividend right here, so which is a good thing for me that I like to look at. So if we get into, let's get a little bit more nerdy and get into the weeds of the numbers here. And this is a great website that I use personally. It's called Qualtron Insights, and it's by a gentleman on YouTube. His name is Joseph Carlson. He's a really great YouTuber, very level-headed investor, and I really love his work, and I recommend you go watch his channel. I'll put his channel below. This is part of his Patreon, and it's pretty cheap. It's pretty cheap. He has a lot of really good tools. I haven't fully set up mine yet, but I love this section of this website. Okay, but let's get into it. Currently, T.Rowe Price. Let me put myself right. So currently T.Rowe Price. We've looked at the price right now. The price is currently quite down. The price is down. We know that already. So let's take a look at all the other things that are important to look at when you are evaluating companies. This is the quarterly earnings of the company right here. It's been going up. Their revenue has been going up. So they have more money coming in that they're managing, obviously. And from the past few quarters here, we've seen that their money coming in is actually quite nice. And this is their quarterly revenue. Let me take a look at this on an annual basis. I'd just like to look at these numbers on an annual basis. It's easier. So annually, 2016, they had 4.2 billion. If we fast forward to now, they have 6.2 billion. So that is pretty nice. The company is growing their revenue, the fees that they're charging their investors. More people are investing with them, and they're making more money over time. Okay. Earnings before, this is EBITDA. It's earnings before interest. I'll put a description, the breakdown description. You can read it, but it's just basically earnings before interest and tax and all these things. 2016, they made 1.87 billion, and if we fast forward to 2020, they've made $3.28 billion. That is also a good thing. They're making money. That is a good thing. So revenue is going up. EBITDA is going up so far. So far, those measures has been pretty good. So let's take a quick look at the free cash flow. You guys can see that it's been quite I don't know what happened in between 2016 and 2018, but this has been mad. Okay, you can see that they went from 22 million to right here they're going to $43 million, and they are just killing it so far within the next couple of years. Okay, so the net income, let's take a quick look at the net income as well. 2016, that net income was 1.2 billion, and so it's just been going up as well. And right now, in 2022, the last update that we have, the net income is 2.37 billion. So on an annual basis, this is a company that don't have debt. Like, they literally don't have any debt. I think they just took on debt during illness 19 that we cannot really talk about on YouTube. They basically took out some few millions of dollars out in debt. But this is a company that don't have debt. They don't like debt, and that is a good thing. This is something that I advocate for as well. Personally, I'm not a big fan of borrowing money for no reason. If you have to borrow money, you need to borrow money to use that money to make money, and then when you make money, that money that you make pays back the loan, not your hard work. Your hard work needs to be preserved. That's your life energy. It needs to be preserved. But anyways, let's take another look here at the dividend. This is a thing that I like looking at. Shout out to Joseph, man. Joseph Carlson, the guy did a great job on this website, man. This is like, this has been a life hack. This website and Hyperchart has been an amazing tool for me in my investment journey. So shout out to Joseph. Even though this is a paid service, it's worth the money. It's so cheap. It's like $10 a month. I really, really love this website. But yeah, let's take a quick look here. We look at the dividend. Okay, this is the thing that I love. I love when companies pay investors. Okay, this is how you make money. They literally pay you out of their check, and that grows over time. In 1991, they were paying 13 cents, right? They were paying 13 cents per share. And then if you fast forward now to 2021, they're paying $4 per share. So every share that you own, you're going to get $4 of dividend per, I think this is annual, yeah, per year. Amazing. This is pretty cool. Let's look at it on a quarterly basis. This is roughly about $1 every quarter. That is true. Yeah. Okay. So the dividend is quite nice, $4 and growing. Obviously, it looks like there's some times where they pay like, they pay like special dividend on these times. But if you look at on the average, the dividend has been quite steady, and it goes up on a steady basis. So which is good as well. So let's take a look at their cash, the current cash that they have in hand, because if they don't have cash, they cannot pay dividend, they cannot do all these things. Okay. So if you look here in 2016, they had 1.28 billion, and that has gone up and gone down, but we see this steady growth over time. So 2018 to 2019, 2020, it's been growing, and right now they have 2.15 billion. Now, think about it. This is just a company that manage other people's money, and with all that, because they manage so much money, they're able to make 2.15 billion in cash right now, which is quite nice. Okay, let's take a quick look at the EPS, earnings per share. That's what that means. I'm gonna leave the full description right here, obviously, so you pause the video, read it, so you know what these things are. You can go along with what I'm trying to tell you here. So what we have here since 2001, they've grown their EPS, like steadily. They've grown their EPS. So this is a company that is doing a great job for its shareholders. Massive job for its shareholders. Now, arguably, this is probably one of the most important parts, apart from dividend. To me, this is probably one of the most important part of investing. So, shares outstanding. Again, I'll leave it in the description of what that means right up here, so you can check it out. Shares outstanding basically just means the amount of shares that a company have available in the public to buy. Now, the more you have something available, the less valuable it is. But the less you have something available, the more valuable it would be over time. And we can see that this company has been not only that they pay a pretty nice dividend on a yearly basis, $4 per share, which is like 3.38% of their income. They are also doing share buybacks, which means that they're buying back shares. They're buying back stock from the market, which means the stocks that you have of the company that you have right now, it gets valuable over time. In 2016, you guys can see that the share count just keep going down over time. And this is the kind of thing that I like to look at in the company that I invest in. You know, like all the metrics that is important for investors to look at, everything is going down in the right places. You know, the revenues, this is the revenue section. The revenue is going up. The earnings before tax is going up. The free cash flow is going up. You know, the net income is going up on a steadily. And on top of everything, they don't have any debt, basically. They don't owe people money, which is what I love. When you don't owe people money, you sleep easy at night. They don't have any debt. The dividend is growing on a regular basis. They pay you, and they even have the special payments, the special dividend payments once in a while. So the dividend is growing, you know, cash is also growing. Cash that they have in hand is growing. The EPS is growing, and on top of everything, the share counts keep reducing. This is like a really great snapshot of the company, and you know, this is quite amazing. I love what this numbers is looking like. Now, like I said previously, you guys know that I love technical analysis, and let's just take a quick look at how that is looking right now. If we look up here, this is the very top that we had recently, and this was $221, right? And we've seen that it's dropped quite hard, and it's dropped to $143. Everything has gone down recently, but it's dropped to $143. Now, this stock has been at $143 before. You know, it's been at that price point before, and that was in November 2000. It's been at that price point before. Now, I'm just looking at two crucial points here, because I wanna buy into this company at two crucial points. I'm gonna be buying a little bit into the company right here, right at this price point, which I think is fair, is not so expensive for a company that has a squeaky clean balance sheet like this. Squeaky clean balance sheet. I want to get it, just put a little bit of money at this point and collect that dividend. The next point that I'm also looking at buying it is if it ever hits this territory again, if it gets to this point where it's at $90, below $100, I'm going to be buying it quite aggressively, and hopefully I can pick up a decent amount of shares, you know, of the company. So those are my areas that I'm looking at buying it at. And this area right here, this is $94, and if it drops some more, that would be great. I'll be looking at buying it, but the average drop is like 30 to 40% from the high, and right now is at 34% from this high, so which is really good. I'll pick up a little bit of shares, and we'll wait to see what will happen with the company. So the last few things that we're gonna do now is to look at the CEO. I want to pull up you know, the CEO on one of the news channel, hear what he has to say, and you know, just I always like to do that. I always like to just watch a couple of the interviews of the CEOs of my companies that I'm investing in, so that way I get a little bit of an idea of how the CEO, how they operate, what their mind is like. You know, we'll get a little bit of an idea, and then at the end of everything, I'll buy a little bit of the stock. So this is the video. This is a quick video on CNBC with the CEO of T.Rowe Price. Let's take a look at what he has to say, and you know, just to get a feel of what the CEO is like. You know, let's take a quick look at what he has to say. And this is the video that was published in June 2020. So let's hear it.
What does stewardship mean at T.Rowe Price? How does it come alive? What do you do to make it so?
Stewardship means you did a great job for your clients, and it boils down to two basic things, I think. A lot of considerations, but two basic things. First and foremost, over the long period of time, we've done a really good job for investors delivering good investment results. Secondly, is we've taken good care of our clients from a servicing standpoint and given them a good client experience. If we do those two things really well over time, we'll do well.
One thing you have done to put customers first and to have their interests come even ahead of your own is you have been way out front in closing funds when they get to a size that you deem too big to continue strong performance. How do you tell? How do you judge when a fund is too big to succeed?
Well, it has been a hallmark of the company over multiple decades. It is always a judgment call when we think a fund is either too big or getting inflows at too fast a pace. And it is a dialogue between the heads of our investment divisions and the portfolio managers themselves, how they feel about managing those clients' assets. If they feel very, very good about it, they have lots of good ideas, we usually proceed. It's when they start to have caution that we tend to close the funds.
How have your expenses changed over the last, say, decade? Are they down? Are they lower? And what kind of pressure has that put on you in the CEO role to keep revenues up and profits high?
It's a balancing act, Tyler. We continue to invest in our business to improve our capabilities, to improve our ability to perform and deliver service. At the same time, we're always looking for efficiencies in the back and middle office because prices, fees, are on a slightly downward trajectory. They tend to go down a little bit over the course of every couple of years, but it's not a panic situation. So I think it's a manageable one for us. We're always looking for efficiencies where we can find them, but then again, reinvesting back into things that drive client satisfaction.
When I think of the history of T.Rowe Price, I think of T.Rowe Price himself and the fund company that he gave birth to as principally a fundamental research-driven shop, number one, and number two, an emphasis on growth. All of that adds up to mean, I think, that you guys truly believe that there is an advantage in active management over passive management, or you would have gone another way.
We absolutely do. The vast majority of our business is active management. We've invested a lot over multiple decades in building a global investment platform that we think can deliver alpha to our clients.
If you guys look at the total asset under management at the time that this was recorded, which is June 20th, 2020, 2 years ago, it has grown since then quite significantly, actually.
Using a spirit of collaboration and helping each other around the world. And this has paid off for our clients. We've done a very good job, as Morningstar has documented over the course of time, over the long term. Key element here, though, Tyler, is the long term and making sure that we're placing investments today that are going to pay off 5 and 10 years down the road for our clients.
Where's the money going today? Where is it flowing from today?
The investments within our company are going in several places, quite frankly. We're investing a lot to build our ESG platform. We have a multi-year, very substantive process whereby each of our products will have very strong awareness of ESG and all the elements and factors from that impact stock prices. And we'll be able to talk to our clients through that lens as well. We're also, like many others, investing in big data analytics. And I think this is a long-term R&D project. There are lots of little wins along the way, but you have to keep investing and keep putting research dollars behind that to make it keep happening for the long term.
Now, as we heard from the CEO, is doing all the things that he needs to do to make sure on the investor side, everything is doing okay on the investor side, basically. We see from the numbers, we see it from the global footprints, we see what they're doing. We see that they have a massive global footprint. They have a lot of money under management. They don't have any debt. The company is looking good on paper. The stock price is cheap, So with all this combination, and they also pay the dividend. They pay a pretty good amount of money in dividend, 3%. So we're armed with all this information. I'm gonna buy a little bit of the stock, and just in the first tranche. I'll watch to see what it does. If it goes down some more, then I'll buy a little bit more. But I'm gonna buy a little bit of stock this is the first tranche, and in the future I'll buy some more. Obviously, I'll do an update on that as well. So let's take a quick look at what we have going on here with T.Rowe Price. Let's look at the performance. Let's look at everything. Let's just take a quick look. So as you guys can see, currently I don't have much of it, but as I look into my portfolio and I look at stocks to buy right now that the market, things are so cheap on the market, I look at stock to buy. I'm going to buy a little bit of T.Rowe Price. And right now, for now, after doing my analysis, you guys see how long this video is. This is how long it takes me to do analysis of companies, things that I want to buy. I've spent time researching them, and this is part of my analysis. Now, T.Rowe Price, what I currently have is $144. Now, the way that I manage my money, every single dollar counts, because every single dollar today will be worth a lot more tomorrow. You cannot be fooling around. Your dollar is, each dollar that you have, those are like your soldiers. They go out into the world and make money for you. So you want to try not to lose them. But as an investor as well, you got to understand that losing is also a part of the game. Okay, you're going to lose at some point when you're investing. It's just a matter of when, But when we do our research, like what I just did in this video, it minimizes the chances of that loss. So that is what I'm saying. But yeah, so this is my current portfolio. Let's take a quick breakdown. It's down just a little bit today. For the week, let's look at the month. It's just down a little bit. So in the past 3 months, they paid me a dollar. You guys can see evidence here in the amount of money they pay. They pay $4 a year. So far in the past 3 months, they paid me $1. Now that I'm buying a little bit more, per share, which is $141 per share. So I'll be picking up 2 shares. So in the next quarter, I should get paid $3.15 or something like that, which is good. I'll build that up over time. So yeah, that's what it's doing in the past quarter. If you look at the past year, I got paid almost $8 here, and all time is close to $10. So this is how you're trying to look at your portfolio and add value to it. And you just look at companies that are undervalued, and you believe that over time they will do well based on your research, like this video. Okay, this is my research process. But yeah, this is what the current stock price is. And let's take a quick look here. It's down a little bit today, paid 2.9% here. I own 1 shares. Yeah, you guys get the spiel. So yeah, I'll be picking up 2 more shares just because the stock is cheap right now. I'll be picking up 2 more shares, and hopefully the stock increase over time, and I'll be collecting more dividend in the future. So hopefully you've learned a little bit of how I look at companies. This is a deep dive into T.Rowe Price. The company is doing well. I love asset management companies that they don't have too much employees. It's nice to invest in those companies. They have a lot of money. This one company has more money than some countries. Okay, they have a lot of money, so they're gonna be here for a long time. The dividend is gonna come in for a long time. What the stock price is doing right now is, nobody have really control over that. But over a long period of time, their stock has gone up. So that is a good thing that we want to look at as well. But yeah, that is pretty much it for today's analysis. I hope you like this deep dive into T.Rowe Price. If you like this kind of content, again, please give the video a sub. If you like this kind of content, please give the video a like. I appreciate it. It helps me out. It helps grow the tribe on this YouTube channel. And if you like this kind of content, please subscribe to the channel so you get notified, when I drop content like this. I appreciate you. Until next time, see you later. Love you all.